Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. As usual, this is the mini S&P 500 futures contract, real time. Last print of 1081 on the 16th day, October 2009, Friday. Looking at the last print of 1081 in the market. This is Friday, Thursday, Wednesday, Tuesday, Monday. Looking back, what we're looking at here is our intraday dynamics. This suggests to us where the market is likely to head. Green means buy, red means obviously bearish. What was interesting was Monday we just had a flatlining market. This was a gap to the upside and just had a flat line just bumping up against this very key, we actually mentioned the Friday before, very key level of resistance around 1070 to 1075. So the market was really trying to hold that level of resistance. And actually broke in a very significant elephant trunk sell signal, actually. Kind of an errant move, though, given the midday break. It was just really accelerated and then, of course, retraced back to the underside of the trend. This was amidst bullish bias amidst this indicator and this indicator. So it was kind of interesting, just a very choppy day. We come into the Tuesday session, more choppiness. We get some follow-through from this selling pressure. We actually do have bearishness. As you can see, a quadruple threat bearish bias for the day, so really suggested that the market wasn't going to recover on this move at least, and essentially would close essentially where it opened, really, and actually closed a little bit lower on the session. What was even more interesting is we finally got the break on Wednesday, and as you can see, it was very interesting. It was a bull gap to the upside, but we had a quadruple threat bullish bias along with a gap that was probably just going to have a shallow fill. Really just came down, didn't really even test this level of former resistance to confirm as support, just a couple points though, and kind of dipped its toe right there, a bit of an errant move, and then just was off to the races. What would suggest that the market was going to confirm this reversal and break above at least this short-term high was the intraday dynamics that we look at. Of course, accelerating green right here, full-blown bullishness right here, bit of a deceleration there, but certainly comfortably bullish overall here. And of course the trend, the price technicals, and what do you get? You get a close near the high of the day and a move actually of about 10 to 15 points really for that day. So definitely a very good tradable day on that day. Coming into Thursday, bit of a different story. We have had kind of a bearish gap on Thursday, and we had the resultant bearishness amongst the indicators. As you can see, we had extreme divergences, and we're actually bearish, had a quadruple threat bearish bias on this open. That really suggested that the market probably wasn't going to make any inroads to the upside. We did actually see some bullishness in the recovery late in the day. We did see some bullishness here, but as you can see, we're at a new term high in price. This, of course, intraday high in price across these 2 days, but an extreme divergence in this indicator right here. We love divergences, and an extreme divergence here, and actually a divergence here as well. So not quite making a new high there. Not quite making a new high there, and certainly full bearishness here. So this suggested to us, at least, that the market was not going to make any further move. And of course, all you have to really do is look over at the Dow, which is, of course, bumping up against the very round and psychologically significant headline number of the 10,000 level. And of course, 1100 is pretty technically significant in the SPX, but nevertheless, the 1070 level was the key level. As soon as we get back below 1070, 1075, will definitely be a more bearish bias, but as you can see right now, there was no follow through, a bearish gap, half of a gap filled just to retest the underside of the trend, and bearish. The follow through here that we saw actually amidst our first indications were divergence yesterday, and as you can see, that's where the market stands right now. We can actually go ahead and look at the daily chart, and what you see is a high level ET sell signal. Now anytime you get a high level ET sell signal, it's probably just going to be a great buying opportunity. You're just going to get a pullback to the short-term measure of trend, in this case 1075, the aforementioned very key and significant level of resistance now on support duty. So should get a pullback there. Hopefully we do, and we'll just continue on higher, bust through 10,000. That would be great for everyone's long-term portfolios. However, as traders, we don't really care where the market's going to go, just as long as it's going somewhere. That being the case, we do remain officially bullish, and as you can see, as of yesterday's close, our official market timing, what we send you guys, all you subscribers, to our free videos, is our official market timing. Tell you when to buy and when to sell on a longer term basis. And as you can see, just taking a look, we kind of tallied up our totals over the last 16 months. We've gained 591 points. Now, of course, having said that, that does take into account the huge gain that we were able to garner of 500 points after going bearish in June of '08 and locking that down actually prematurely a little bit for a gain of 500 points in the S&P cash market index. Of course, went to neutral, back to bullish. Definitely take all short-term profits we mentioned there. Officially bullish at 805, over 800. Closed that for a gain of 100 points, went back to neutral on this right shoulder. Didn't expect any fall through the downside, but didn't want to be there in case there was. Went back to bullish over 960 at 961 and are sitting on 131 points. Probably about 125 points with today's move, but definitely want you to take advantage of this timing. If you're trading Ridex, any of the shares, you can trade the SPYs or the spiders or the quadruple Qs, no longer the triple Qs. You can certainly take advantage or just position your mutual funds accordingly. So definitely hope you're taking advantage of this. 600 points. If you're just trading one ES contract, that's $29,000 over the last 16 months in gains for that. So we're actually going to go ahead and switch over. Running out of time here. Had a couple of, not sure if we mentioned these in last week's video or not, but had a couple of, couple of emails suggest a little bit of feedback. Subtracting all, this comes from LF, subtracting all expenses, slippage commission, and fees, actually. This client's up $18,600 a year on a MapDT version 4.0. HR portfolio. So started trading January 1st and now sitting on 18,000. This, of course, was last week after the year. His only regret, of course, was waiting 2 years before making the move to MA. This comes from a client who was trading actually a couple units of dual day trader ES. We thought he might, after gaining $7,500 in the DT version 4.0 HR on the first of the month, thought he might be interested in upgrading. He did, and of course paid his quarterly fees in the next trading day and just wanted to thank us for doing that. So that was kind of interesting. If we go ahead and scroll back over here, we can see, we're going to take a look at quickly a couple of the benefits of trading the futures market, just to kind of refresh your memory that you only get taxed 60% of your gains, your profits are taxed at the long-term capital tax gain rate, which is currently just 15%, 0% if you're in the 10 to 15% tax bracket if you have enough deductions. So you really come out saving. Trading a $25,000 account, let's say you made $75,000 in gains. That's $8,100 over a 5 annum period, just doubling your money at 100%. Leads to almost over $250,000. So the tax benefits, of course, consult your CPAs. The tax benefits of trading stock index futures are quite considerable. Particularly, this assumes a 33% tax rate, 33%, which is right in the middle of 30 to 40%, where we are now. And of course, going, you see 33% versus 22% effective, going considerably higher. Likely under this administration to at least 50% and possibly beyond. As of yesterday, 10/15, the dual day trader ES continues to lead the pack in terms of performance on a 101-day return of $12,300 or 246%. As you can see right there, really outpacing all of our other portfolios. The dual day trader DS is actually coming in third behind the MapDT, the venerable $20,000 MapDT at 153% over the last 101 days. Over the last 41 days, the Swinger DT is outpacing everyone with a triple-digit gain of 107%. And the Delta B actually at 75%, so that's kind of interesting. The Delta B really outpacing, coming on strong. But we just want to take a look at that. That's the S&P cash market. These are locking in those gains. We just looked at that. Here's our S&P system swing system 5.0. Trades the Dow, 1,100 point gain last month, July and August. Actually, and look at these rocketing gains, amazing gains for September into October. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we hope you enjoyed the video. We'll see you next time.